right. Steve Forbes, please stay with us. Bob Wolf, please stay with us. I want to talk a little bit about the stock market. Rebecca Walser is here, the CEO of Walser Wealth Management, and Liz Peek, of course, Fox business contributor and columnist. Rebecca, let me go to you first. One of the things that surprises me with all the increase in corporate taxes that are scheduled in this plan, now, I don't know if it passes or not. I suspect it will. I'm surprised it hasn't hurt the stock market. I'm surprised it hasn't hurt PEs, for example, where the E is jeopardized by a much higher tax rate. What's your take on this, Rebecca?
Irrational exuberance. Larry, this is just stimulus happy. You pump in between the Federal Reserve and the CARES, the HEROES, and now the ARP, and now additional $2 trillion of infrastructure, and you've got a market that just thinks, hey, there's no end to this Keynesian economic policy here. Let's keep this going, and you'll see PEs that are just outrageous, unsustainable.
Liz Peek, how do you read it? The market has, kind of been indifferent. Just maybe it's not going to happen, or maybe it's down the road. But it's going to be very real after this speech today. It will be codified into legislation. And I think it has a pretty fair chance of getting through 51-vote reconciliation, maybe not till the summer or fall. So, Liz, is the market sleeping here or what?
Well, I think it's very near-term oriented, Larry, and I think we're hooked. Investors are hooked on free money, on stimulus spending, and the old adage, don't fight the Fed, still applies. The Fed has given us no indication at all that they're going to try and tamp down inflation, raise interest rates, do anything to counter whatever ill effects of this big spend-a-thon lie in wait for us. And I think investors are aware that that's an issue, but right now the other is more important. The fact is a lot of companies are going to be benefiting from all this spending. And of course, that's one of the reasons I don't like it is because the government is back to picking winners and losers. You see that in the stocks that went up today. People are going to bet on who's going to be a beneficiary, who's not. I just think the whole thing is a terrible sort of undermining of our natural organic recovery. But I think investors are just focusing on the near term.
Well, Rebecca, you got a lot of good news out there. The ADP jobs hinted at a very strong jobs number on Friday. I think Wall Street might be looking for 650,000, some whispering, say, 1 million jobs on the report on Friday. Conference Board consumer confidence up very, very big. Conference Board employee or job confidence up really big. Let's see, the Chicago Fed, the Philly Fed, I think the Empire State New York Fed, all showing big manufacturing numbers. So we're looking at a boom, aren't we? We're looking right in the teeth of a major, major boom, Rebecca.
No, I wish, Larry, but I think it's exactly what we've just said. You're looking at these numbers in March when you had a $1,400 stimulus that went to pretty much all adults that qualified financially. And that's huge. That the $600 in January gave us a 2.1% and later revised to 3.4% increase in personal spending on just $600 in the month of January. So when you get $1,400 in March, consumer confidence is going to go up. People are going to have better sentiment. But let's see what happens when next month they're back to their regular whatever they're getting, and they're either not working or they're getting an unemployment check with a $300 boost, and that's it. So this is not long term. It is all sugar high, drinking a Mountain Dew. That's what this is, and I do agree we need it to get us through this, but Liz is 100% right. We have to move to organic, reopening, recreating, because stimulus is going to not work forever. As you know, Larry, it doesn't work out in the end.
Liz Peek, do you think President Biden this afternoon is going to persuade people on the merits of his package?
I think it depends on what he has to say about how we're going to pay for it, Larry, because Americans are very wary of politicians who tell them that taxes are going to only go up on rich people. We saw that in Illinois this past fall when Democrat Governor Pritzker proposed a tax increase on only the top 3% of households. Voters turned it down because they know better. They know it affects job creation and wage hikes and everything else. So there ain't no free lunch. And I think voters are pretty skeptical of that.
I want to go to Rebecca Walser. Rebecca, I spoke today to a very high former senior official who knows a lot about money and Wall Street and banking and economics. And he said to me, we're not going to get 8 or 10% inflation, but we are going to get 5, 6, 7% inflation. And this is a very smart guy, not an alarmist. He's a very cool-headed, link-side, straightforward guy. What's your take on the inflation story right now?
Well, it's a problem, right? I mean, the Fed expects 2.4% by the end of 2021, and they're willing to tolerate that so that they can get back to a 2% next year. But I don't see it, with all of this money coming in. I understand MMT, modern monetary theory, we're thinking that we can just spend whatever we want forever, but we've already seen that doesn't work, Larry. We've already seen the inflationary pressure just these last, 2 months. The inflationary pressure has been incredible with the steep yield curve. So when you stimulate at this level, it impacts. And I love how they go to core CPI and take out food and gas, which are the two things that Americans hit their pockets the most.
Liz, I guess I'm the only guy that isn't fearful of inflation. And the reason I'm not fearful right now, I'll change if all these taxes are increased and the supply side of the economy is choked off. But the dollar is holding very nicely. The DXY is at 93. I don't know. Somebody sent me some charts today. It's in a long-term range. To me, if the dollar holds the value of our money, we're not going to get some massive inflationary wave. It's just not going to happen. I'd be worried about deflation with giant tax hikes. Inflation, I know you're not agreeing with me. No one agrees with me. All my friends have deserted me on this.
Well, I think the dollar is strong partly because interest rates have gone up, partly because inflation expectations have gone up, Larry. So I think it's a little bit of a circular argument. I'm a little concerned about it because of what's happening in China. China's cost of living is going through the roof right now. They're going to be exporting that to some degree to the United States. We have rents in this country, which have been a real anchor to leeward in terms of keeping inflation under wraps. Right now, rents are going up very sharply because there's a shortage of housing. There are an awful lot of elements where prices are definitely going higher. Will it continue into next year? That's the sort of argument to the other side, is that no, it'll abate next year. I don't know. I mean, we've all seen this. Once inflation takes hold, it's pretty hard to turn it around, it seems to me.
I know. I'm getting very lonely in my position. Steve Forbes, the one thing I do not like modern monetary theory. I'm not sure I know everything about it. I think it was today, Steve, in the New York Post, Nicole Gelinas wrote a pretty good column, and she mentioned monetary theory, the modern monetary theory. And apparently, I'm sorry I cannot remember the name, but the professor in Long Island who was one of the big sponsors of this, and I think advised some senators, she said she did warn that inflation was a bad thing. I mean, this was in the column that I believe it was Nicole Gelinas who wrote this. That inflation is a bad thing, and she doesn't want that. So it's not like they're necessarily inflationists, Steve.
No, but they learned the wrong lessons, Larry, of 2008 when they had that massive expansion with the subsequent QEs, massive increase. And they said, well, we didn't get the kind of inflation we had in the 70s. The reason you didn't for that on that particular occasion was that banks and financial institutions were rebuilding their balance sheets. The Fed was paying interest on those reserves. So that money effectively was put in the deep freeze. That's not going to happen this time. And we could get the worst of both worlds. I'm old enough to remember the 70s where you had stagnation and inflation. So a deflated economy and an inflated price level.
No,
not a good combination.
Well, you're right. No, you're curtailing the production of goods and you're stimulating aggregate demand. It's not good. Thanks, everybody. Rebecca Walsey, Liz Peek, Robert Wool, Steve Forbes. You're all terrific. Jim Jordan, I think we lost him. Everybody, thanks for watching. Kudlow, please have a great